What if I told you that the most anticipated IPO in history is about to drop, and it could either make early investors millionaires or leave them holding bags worth less than their college textbooks? SpaceX is finally going public, and here's the crazy part. Nobody really knows if this is the opportunity of a lifetime or a $1 trillion mistake waiting to happen. Stick around because I will analyze all the pros and cons regarding investing in this IPO. Let me tell you about my friend Jake. Back in 2012, Jake's roommate kept begging him to invest in this weird electric car company called Tesla. The stock was trading at around $30. Jake laughed it off. He said, "Electric cars? Never gonna work. People love their gas stations." Fast forward to 2021, that same stock hit $400. Jake's roommate retired at 35. Jake, still living in that same apartment, wondering what happened. Now Jake's looking at SpaceX and he's sweating because this feels exactly like 2012 all over again. But here's the twist. It also feels like every other hyped IPO that crashed and burned. Remember WeWork, or worse, remember when Meta dropped 75% after going public? Yeah, that happened. So here's the question that's keeping Jake and probably you up at night. Is SpaceX the next Tesla or the next WeWork? And more importantly, how do you figure out which one it is before you throw your hard earned money at it? Are you looking for ways to improve your understanding of economics, management, and finance that are actually backed by facts and real life examples? Welcome to DollarWise channel. Before we dive into the pros and cons, let me tell you something that most financial analysts won't. There's a specific pattern that happens with every major tech IPO, and it's happening right now with SpaceX. I'm going to reveal exactly what that pattern is at the end of this video. And trust me, once you see it, you'll never look at IPOs the same way again. But first, let's talk about what's actually happening. SpaceX, the company that's literally trying to put humans on Mars, is preparing to go public in mid 2026. We're talking about a company valued at somewhere between 1.5 to $2 trillion. To put that in perspective, that's more than Amazon, more than Google's parent company Alphabet. This isn't just another tech company listing on the stock market. This is potentially the biggest IPO in human history. Now, here's where it gets interesting. The company wants to raise around $75 billion. Let me repeat that, $75 billion. That's enough money to buy every single McDonald's restaurant on planet Earth and still have change left over. But here's the question nobody's asking. What happens when you try to absorb that much money into the stock market all at once? I'll come back to that in a minute because the answer might shock you. Let's start with the good stuff, the reasons why people are losing their minds over this IPO. Pro, number one, monopoly power. SpaceX currently controls about 60 to 70% of the global launch market. Think about that. When you need to get something into space, there's really only one phone number you're calling. That's like if Amazon had no competition in online shopping. Zero. That kind of dominance is incredibly rare, and it gives SpaceX pricing power that most companies can only dream about. Pro number two, Starlink is a cash machine. Remember when I said SpaceX wants to raise $75 billion? Well, they've already built something called Starlink, a satellite internet service that's growing like crazy. As of 2026, Starlink has over 5 million subscribers and is generating billions in revenue. This isn't science fiction anymore. People in remote areas, on ships, in war zones, they're all paying monthly subscriptions. It's recurring revenue, it's predictable, and it's growing 40 to 50% year over year. Pro number three, the innovation engine. Here's something most people don't realize. SpaceX isn't just launching rockets, they're reusing them. While other companies build a rocket, use it once, and watch it burn up in the atmosphere, SpaceX lands theirs and flies them again. Sometimes the same booster has flown over 20 times. That's like buying a plane ticket and the airline uses the same plane for 20 flights instead of building a new one every time. The cost savings are absolutely insane. Pro number four, government contracts NASA, the Department of Defense, intelligence agencies, they're all writing checks to SpaceX. We're talking about multi-billion-dollar contracts that are locked in for years. When the US government is your customer, you don't have to worry about going out of business next quarter. Pro number five, the Elon factor. Love him or hate him, Elon Musk is a once in a generation visionary. The guy didn't just make electric cars cool, he made them inevitable. He didn't just launch a space company, he made private space travel a reality. When you invest in SpaceX, you're betting on Musk's ability to do the impossible. And so far, he's got a pretty good track record. But before you get too excited, there's another side to this story. And honestly, it's the side that keeps professional investors up at night. Con number one, the valuation problem. Remember when I said SpaceX is valued at 1.5 to $2 trillion? Let's do some quick math. The company is expected to generate around 22 to 24 billion dollars in revenue in 2026. That means investors are paying roughly 87 times the company's annual revenue. To put that in perspective, Amazon trades at about 3 times revenue, Tesla trades at about 8 times, SpaceX at 87 times. That's not just expensive, that's pricing in absolute perfection for the next decade. Any stumble, any delay, any problem, and this thing could drop 50% overnight. Con number two, the capital burn. SpaceX is burning through cash like it's going out of style. Building rockets is expensive. Launching satellites is expensive. Trying to put humans on Mars, that's so expensive it makes buying a yacht look like pocket change. The company needs to continuously raise money just to fund its ambitions. And when a company is valued at $2 trillion, raising more money means either taking on massive debt or diluting existing shareholders. Neither option is great for your investment. Con number three, the key man risk. Remember when Elon Musk bought Twitter, the stock prices of his other companies tanked. Why? Because investors realized that Musk is spread incredibly thin. He's running Tesla, SpaceX, Neuralink, the Boring Company, and now X, formerly Twitter. What happens if he has a health issue? What if he gets distracted by another venture? What if his controversial tweets scare away government contractors? SpaceX is incredibly dependent on one person, and that's a massive risk. Con number four, regulatory nightmares. Space is not the Wild West anymore. The FAA, the FCC, international treaties, there are so many regulations that can slow SpaceX down or even ground them. One bad launch, one piece of falling debris, one collision in orbit, and suddenly you've got regulators breathing down your neck. And when you're trying to launch rockets almost daily, the margin for error is basically zero. Con number five, the liquidity trap. Remember that $75 billion SpaceX wants to raise? Here's what happens when that much stock hits the market at once. Early investors, employees, and insiders who've been holding shares for years suddenly have the ability to sell. And many of them will. They've been waiting for this moment. This creates massive selling pressure in the first few months. It's not uncommon for IPO stocks to drop 30 to 40% in the first 6 months simply because there are more sellers than buyers. Con number six, competition is coming right now. SpaceX dominates, but Amazon's Project Kuiper is launching satellites. China is investing billions in their space program. Blue Origin, Virgin Galactic, they're all coming. And while SpaceX has a head start, monopolies don't last forever in free markets. So let's bring this back to Jake. Jake's still trying to decide. On one hand, SpaceX has monopoly power, a growing cash cow in Starlink, insane innovation, government contracts, and Elon Musk. On the other hand, the valuation is astronomical. They're burning cash, there's key man risk, regulatory hurdles, potential selling pressure, and coming competition. Here's what I can tell you. This IPO is going to be one of the most watched financial events in history. The pattern I mentioned earlier, it's called the IPO roller coaster, and it happens with almost every major tech listing. Massive first day pop followed by a brutal sell off, followed by, well, that depends on the company's actual performance. But here's the thing, I'm not going to tell you whether to invest or not. That's not my job. My job is to give you the facts, show you both sides, and help you understand what you're actually looking at. Important disclaimer, this video is for educational and informational purposes only. We are analyzing the SpaceX IPO from a factual standpoint. This is not financial advice. Every person's financial situation is different. Before making any investment decisions, you must consult with a qualified financial advisor who understands your personal circumstances. Do your own research. Never invest money you can't afford to lose. Now, I want to hear from you. Are you Team SpaceX or are you sitting this one out? Drop your thoughts in the comments below. And if you found this helpful, smash that like button and subscribe to Dollar Wise channel for more no-nonsense financial breakdowns.